Welcome to Show Me the Money with Michael.derk. Show Me the Money is a podcast that is bringing in industry leaders in the commercial real estate sector that are either on the financing side, the development side, the acquisition side, disposition, brokers, investors, bankers, management companies, everyone that's in and out of the business and all facets of the trade, so that hopefully you can benefit if you're looking to grow your business, start your business, or maybe transition into something else. Today, we have a great guest on by the name of Kody Suryan. Kody is the CEO and founder of Paloma Communities. Kody is the youngest guest we've had on the show thus far, given this is season 2. And he is probably one of the most dynamic and hardest working individuals I've come across. I think you'll really enjoy to hear his success stories, even some failures he's had. But over the last 4 years, he's grown his business exponentially from 0 to 650 apartment units, as well as 3 hotels. This episode was sponsored by Fairgrove Property Management. With a legacy spanning nearly 50 years and 8,000 units under management across Southern California, Fairgrove provides a unique blend of hands-on operational experience and institutional expertise that is tailored to each of their clients' investment goals. More than a basic property manager, Fairgrove is counted on as a true operating partner and strategic advisor. Whether you own one or multiple properties, holding long-term, or looking to execute a value-add business strategy, no one has been better for our clients than Fairgrove in value creation and property optimization. You can find Fairgrove by going to their website at fairgrovepm.com. Again, that's fairgrovepm.com. Give them an opportunity to assist you. I know you won't be let down. Hope you enjoyed the episode, and thank you again for watching. Welcome to another episode of Show Me the Money. Today we have a guest on, good friend of mine, a colleague, and someone who's been very successful in the business, a gentleman named Kody Suryan. Kody Suryan founded Paloma Communities in 2020 and serves as the firm's chief executive officer. At Paloma, Kody is the forefront of guiding the company's expansion and spearheading new acquisitions. Kody is also intimately involved in overseeing the company's development team. Prior to founding Paloma Communities, Kody worked in finance for one of the largest land developers in the state of California. He is also a licensed CPA in the state of California, and Kody is a graduate of the University of Southern California, go Trojans, where Kody received his BS in both finance and accounting. Kody, welcome to the show, and thank you so much for being here, taking time away from your busy schedule. We really appreciated it. I know the viewers appreciate it as well. So jumping right in, Kody, you launched Paloma Communities a few years ago. What really triggered you to start this firm? What were the triggers in your life to do this, to get everything going? If you could touch on that, please.
Yeah, well, first of all, thanks for having me. I appreciate it. Why I started Paloma? Well, as you mentioned, I was working for a land development company in Newport Beach for around 5 or 6 years, I think. I left in the beginning of 2020 to do my own thing, and the plan was to do land development, where what we do to simplify it, we would buy or control unentitled or underutilized land, and once it was, entitled, we'd sell it off to apartment developers or home builders. And in California, it's very lucrative because it's very risky. I mean, getting something converted from retail or vacant land to residential is not an easy task like it is in maybe Texas or Arizona, where it's a little bit more development friendly. So my plan was to do that and focus on not such big pieces of land or big real estate plays like I was doing before, but more small infill projects. But for the first 2-3 months, I didn't do anything. I'd been working a lot and wanted to spend time with my family. I had 2 little kids at the time. And so when I was ready to rock and roll, COVID happened. And I was like, what the fuck is this? So I don't know if you're allowed to say bad words on this, so my apologies.
That's
But
okay. It's
uh,
real. It was a
so
scary time.
yeah, and I was like, I don't know what the hell this is. And if the entitlement process takes 18 to 24 months, if I tie up a piece of land and spend money getting it entitled, I mean, nobody knew right when COVID happened that we'd have this massive run of just like historic growth in real estate and inflation and everything else. I mean, when the week COVID happened, if someone told you that this was going to happen, you'd be like, yeah, okay. So, um, I don't know. I didn't know what to do. I was still kind of looking at some land development stuff, but not aggressively. And there was a friend of mine who had a listing for a 13 unit apartment building in Long Beach and Bixby Knolls, which I know you're familiar with, Mike, not far from Virginia Country Club. He's like, why don't you just do this and get the ball rolling and just have something? And I was like, it's not a bad idea. So I then met another broker who had the listing because this individual did not anymore. And his name was Bogey. Obviously, you know Bogey,
Yes.
Steve. So one thing led to another, and I didn't close on that until September of 2020. And I did everything. Raised the money. I um, property management, did it myself, took the trash out. My wife would help, did all the leasing, did all the marketing. I literally did everything. I swept, um, took every phone call from all the tenants. So there wasn't one thing I didn't do. I didn't have any employees, it was just me. So I did that. And then a couple months later, bought 16 units in the Belmont Heights area, which Mike, you're familiar with, obviously.
Right.
Um, and then after that, that was December 1st. We closed. It was my birthday, my 30th birthday. And then I just said, I'm just going to narrow and deep, small to mid-size multifamily in my backyard. And I noticed that there was such a good opportunity to look at something from more of a sophisticated institutional mindset, but not go over institutional assets because you can't find traditionally, um, or it's very rare to find a 300 unit building that's so mismanaged that rents are 50% below market.
Right.
You're not going to find that upside because whoever built it or owns it, there's some sophistication there where it's not a mom and pop who built 300 units. So that's what I've been doing. And along the way, we've purchased 3 hotels, and it's kind of diversified. We're doing development now too, but that's how it all started. And we went from me managing everything from the first 4 acquisitions to now we have almost 20 employees.
That's great, Kody. And that, I mean,
Yeah.
that speaks, worlds to you and your success to literally talking about sweeping at the property. And so when you talk to other, equity investors you have, or you talk to lenders of where you were and where you are today. And so, how many apartment units do you have now under your ownership and management?
650, I think.
650. I mean, that's amazing. In less than 4 years, you've been able to achieve 650 units plus the hotels. I mean, it really just speaks to your character, speaks to your grit, and that's a big deal. And for other younger people and maybe people looking to transition in their career to actually do it, I mean, it's awesome that you stepped up and actually did it, because a lot of people talk about it, or a lot of people criticize people that try things and fail, but I can't recommend it high enough for people to do what you've done. And so it's impressive, and I hope the viewers appreciate that, which I'm sure they will.
Yeah,
So,
thank you. I appreciate it.
of course. So, and I know you have a long runway ahead of you to grow that exponentially. Getting into deals and seeing, especially the transition in the market that's happened over the last couple of years has been significant. what are you still actively buying deals? This is a kind of a two-layered question. Are you still actively buying deals today? If so, what are you buying? And how do you see the financial markets as far as interest rates kind of playing into that as a role for you?
Yeah, we're very, very active right now. We just purchased, and to a lot of your listeners, I know it might seem like, well, no, I guess I don't know, but um, might seem, you know, small or immaterial, but that's our kind of our niche is we're buying 20 units here, 60 units here. So it's like, we're always buying. It's not like, how many deals did you do this year? It's like, we did one, but it was 300 units. No, we bought seven, and it was 300 units. So
Right.
we just purchased 56 or seven units 3 months ago, probably. So we're very active. We have offers out all the time. Cap rates I get. To me, when I look at a deal, I don't look at. I mean, I do look at it, but it's not super important to me what the current cap is. What's more important to me is what the market cap is, um, because you know, I'm my business model isn't uh, cap rate compression or buying anything stabilized. I mean, when I referenced that Coronado deal, Mike, that the second deal I bought, that was probably the most stabilized we've bought.
Okay.
But outside of that, I mean, the most stabilized outside of that deal, rents were 30% below market.
Right.
So it's like I
And with
can't.
the regulation in California, to be able to battle through all that and to be able to work through that is huge because management on these, as you know, Kody, getting those rents up, managing tenants, especially through COVID, not paying rents. I mean, again, I mean, you've done a great job managing through that, but you're probably still looking at that. And are you concerned about future regulation and affecting you on that basis?
I mean, am I concerned about future regulation? A little. The current regulation, yeah, it's not ideal. I wish I could max everybody out, right? But I can't. But I think that's kind of where our competitive advantage comes in because, it's AB 1482. So if we buy everything, usually everything's month to month with very little increases, if any, in the last year. So we're able to do 5% plus CPI, plus we establish, we build back utility, we do RUBS program, we do a thorough unit inspection on every single unit. And if there's any lease violations, then that gives us grounds to evict them. So, and usually we work with them and we try to tell them, hey, look, this is a lease violation. And you know I would say over half end up moving out, so we get significant turnover just by being hustlers and being creative. It's not as simple as, well, my max increase is 5% plus CPI. No, it's not. You can obviously be more efficient with your utilities, billing them back to the tenant, and so they don't like that. You can then start charging for parking. They don't like that. Then start charging for pets. They don't like that. Then you say, well, Michelle, looks like this other individual lives with you. They're not on the lease. So they're going to need to apply. Oh, her credit doesn't qualify our criteria. So sorry, either she has to move out or you both do. So
Right.
there is gray area for sure. And you do take a little bit of a gamble,
Right.
because if they try to get litigious, but that's when we start to work with them. And we've been very fortunate to have significant turnover, and which is, transcended into significant rent growth across the portfolio. So I
Sure.
guess I didn't really answer your question about the financial markets. Yeah, I mean, for lack of a better word, do interest rates suck? Yeah. Has it stopped us from continuing to buy and being active? No, not at all.
Right. So, I mean, there's also opportunities too, right? As this market's in transition, a lot of our larger clients, obviously, like yourselves, have been active in the market. There's always ways to get around everything. Walls go up everywhere, but it's a matter of figuring out ways to navigate, work around it, create, opportunities for yourself and your investors, and capitalize on those. So,
And
It's
it's a little different because my business model is not turn and burn. I'm a long time holder. Will we sell stuff? For sure. There will be assets that we'll hold on to. But I mean that we'll sell. But for the most part, we're long term holders. And if I'm stabilizing a project that I'm going to have for 10, 15 years, if my interest rate in the first 3 years is 5.5 or 6% versus 4%, does it really move the needle in 10 to 15 year timeline of a deal? Not really.
no. Yeah, you're exactly right. So, as far as just one last thing, just to wrap on that point, as far as interest rates, do you anticipate them to be going down, or do you feel that they're going to be staying steady, going up? Like, what do you feel that the Fed's going to really be doing here in the foreseeable future?
I mean, they'll come down. I mean, they've already indicated they're going to come down. How much over the next 6 to 12 months? I don't know. I mean, the election is going to be very important to determine that.
Right.
The Fed can say, well, we control. It's like, yeah, right. Yeah.
Yeah.
You don't think the president has any influence or the upcoming election. And I mean, it all is, it's the government, it's corrupt. And I can bet you one thing, take politics aside, whether I'm right wing or left wing. If Trump gets in, I can guarantee you they're going to come down a lot faster than if he doesn't.
Right. Yeah, that's pretty much the consensus we're hearing across the board too. Um, Also, as far as we've touched on multifamily, um, which areas are you focused in on buying? Are you staying in Southern California? Are you looking to diversify? Like, what geographic area are you really focused on staying in and growing towards?
Good question. Long term, we will start to expand outside of Southern California into other states and markets. But for right now, we've had tremendous growth in the last 4 years, and I've done 90% of it in my backyard. And to the extent that I run out of good deals in my backyard, I don't have any reason to go anywhere else. And I understand California, and obviously, Mike, you understand because you left. But um, great markets in California, especially Long Beach, where we do a majority of our stuff, which is largely driven by high paying union blue collar jobs, is very stable. And, occupancy across the portfolio is 95%. And growth, even, market rents are continuing to go up. Um, And if we have some big downturn, I think a good market, coastal Long Beach, the market goes down 20%. Rents aren't going down 20%. I can guarantee you that. And so much of the high paying uh, blue collar, or not necessarily blue collar, but renters in Long Beach is driven by the activity in the port and the stable jobs in the port. And I may not agree with unions, but when they're renters, I certainly agree with them. So I like Long Beach. I like Southern California and good markets. I don't like San Bernardino and Lancaster, but I like it here, and I'm not worried about some. I mean, I always tell people this about California. Even today, despite the amount of people that have left California, we have the largest housing shortage in the history of the United States.
Right.
Okay. So people could still leave. We're still going to have a massive housing shortage. So I'm not worried about having this massive amount of vacancy because we have too much supply. I mean, we are so undersupplied in housing in California. So I'm not too worried about this area and the politics, although I don't agree with them. But I mean, so yes, a long way of saying I'm going to stay doing stuff around here until I run out of deals to do here. But if I
Right.
see a great deal in Northern California, or I see a great deal in Arizona or Texas or Boise or Denver, I'll go there all day.
Sure. I understand. And yet you made the comment, physically I did leave, but I'm still there as an investor and I still do a ton of business there. And I'm back there a fair amount, visiting clients, obviously like yourselves and different lenders and different clients we work with. So I think it's a amazing economy. There's no place like it in the United States. Obviously, it's the most diversified economy, and there is a huge scarcity. You nailed it. There's a huge scarcity of housing relative to the population. So, and they're not making any more land there, and so
No,
especially
I'm glad you mentioned the land. Sorry to interrupt you, but there's one thing that we have that I don't think anywhere else has, and you can make the politics as nasty as you want, or the political environment in or in California, but specifically Southern California. It is the best climate in a first world country in the world, so you will always have demand.
right.
It's
Yes.
not going to be just some mass exodus and it's like the apocalypse here. It's too nice. There will be demand always.
Right. And there's a lot of people who just can't leave too for tied to families or workforce, or maybe it's cost. I mean, there's a lot of things to move, and it's just not something where you can snap your fingers. It takes a toll, and it's a very significant change, for families and children and all those variables. So, um,
Yeah.
yeah. So I would like to touch on. So we talked on the multifamily, but I would like to hear a little bit. You bought 3 hotels, which is a huge difference of an apartment deal, because apartments obviously you're renting out monthly or annually, but a hotel is a going concern. So that's an operating a business versus operating, apartments on a monthly basis, which I think would be much easier to do. But a hotel, you really got to be on point with that. So how did you transition into that, and how are you managing that to, switch out of the apartment role?
Um, how did I fall into that? So when I originally started Paloma and it was going to be a land development company, I looked at a 50 room hotel in downtown Long Beach. And the initial business plan, the reason I looked at it was just to scrap the hotel, entitle it for a high-rise apartment building or
Okay.
something to that effect, and then just sell the land. But then the more I got involved with it, um, I said, well, why don't we just? I'd seen a project in downtown LA at Micro Studios, and it baffled me that I don't understand it. But, and I'm not, that old, but kids in their early 20s or mid 20s, they'll live in 150 square feet and be fine, and like be just happy as can. I can't. I mean, my if my office is my physical, like my office within my office, even if that was 150 square feet, I couldn't handle it. So um I was gonna convert it to like micro studios because they were killing it in downtown LA, even with COVID. um so that's why I originally looked at it, and then the more I got involved with it, and I said, well, this could be it was a really unique asset. It is a unique asset. And so then I ended up pivoting back to keeping it a hotel, and I signed a master lease agreement. So it's more of like triple net to me. I do get upside
Okay.
in, above a certain ADR. I do share in the upside. And then adjacent to that was a parking lot that came with that acquisition. So we are going to develop 50 units on that. We're working on that right now, apartment units. But when I did that deal in downtown Long Beach, I got introduced to someone who owned a very unique, rundown but unique hotel next to the Montage in Laguna Beach.
Oh, nice. Great location.
Oh, the best, right? So someone said, "You got to meet this guy, Chris. He's got this rundown hotel, and I don't know if he'd sell it, but you should go meet him." So I drove to Laguna. We kind of hit it off, and he owns a bar. He's more in the restaurant business. He owned a bar, an Italian restaurant, and a great guy. And we hit it off. And I remember being in Michigan with my in-laws and wife in Detroit. And I was talking to Chris. I was like, Chris, let me buy the hotel. And he goes, and he yells at me, he yells across the room on the phone. But he's talking to his wife, Brittany. And he goes, Brittany, should we sell the hotel to Kody? And she must have said yes. And then he threw a number out, and it was very, very attractive. We paid $450 a door, um, which seems like a lot, but not next to the Montage in Laguna
Right.
Beach.
It's prime.
Oh, the best. I mean, we have ocean. It's spectacular. It's under renovation right now, and it'll open in December or January, and it's spectacular.
That's
Um,
great. How many rooms is
but
that?
and then so then I plugged in. I had met someone in the past, Avi Brosh, who owns Palais Society based in LA, and there's nobody better than running high end or higher end boutique hotels and running them efficiently, because it's a very, very difficult asset to manage,
Right.
because like you mentioned, it's an apartment building with a new tenant every single day, and you have to
Right.
feed them, you know, and do their linens. So
Right.
it's not something that I can do, and it takes a very, very sophisticated operation to do it efficiently. And I think Palais Society is the best. So I plugged them in. They operated it as is while we were getting all of our permits to do the renovation. Um, and then again, like the Long Beach one, once I did that deal, someone introduced me to the Laguna guy. And once I did the Laguna one, some guy calls me and says, hey, there's this guy in Napa. So then I started talking to this guy in Napa. Then we bought a 30 room, but they're large cottages in St. Helena, Maine,
Oh,
and Maine, one of the
that's a
best
great
locations.
location too.
Oh, we're a stone's throw from all the best wineries, and we're going to do the same, uh, kind of reimagination of something that was a little tired in an A-plus market like we did in Laguna,
Nice.
with Palace Society. But they're great partners, and they've been amazing, and I trust them. So when it comes to the hotels, I really lean on them to work their magic and do what they do best. So I'll find the opportunities and then plug them in, and it's a good little formula that we've worked out with so far.
Good.
Um, with the apartments, the reason that I self manage everything is because I really want to have my finger on the pulse, and it's hard to really trust a third party property management company.
Right.
They have absolutely zero vested interest in your bottom line. It's all about top line and their fee. And are there good ones out there that are more honest than others? For sure, but there are more bad than good. And I need to have full control and be able to manage not only the top line but the bottom line too. So that's why I manage my apartments and started the property management side of Paloma. With the hotels, though, I am very fortunate to have a relationship with Palace Society and trust them that um, they're not just focused on the top; they're focused on the bottom too.
Right. Well, good. It's awesome to see you successful in, Long Beach, Laguna, now Napa. That's just that's really cool that you've been able to adapt, and especially having the ability to trust the management, because management, as you know, Kody, is everything. I mean, you could buy the deal 20% below market, but if you can't manage it and operate it, I see so many investors, unfortunately, over the years just flounder, and it's really hard to manage. And most people think they can do it, and they try their hat on it and are not very good at it. So it takes a real skill and the grit to make sure you're successful on that venture with good management. Um, Next question: as far as investments go, what was your favorite investment you've done, and maybe which one was not your favorite, and maybe you wish you would have not done that one? Maybe if you can just touch on two investments you've done over the years.
Favorite? I mean, I'm looking back. the first one, it's kind of that starts at once you do one. I mean, it
The
just gets
13
easy.
units.
It always gets 13 units, and then I think we bought it for two something a door, and then 6 months or a year later, I sold four of the units because it was separate. It was like 9 units and 3 units. I sold four of the units for 450 a door or something stupid, and then so kind of our basis on everything else went down. But getting the first one done is so stressful. I mean, I was very fortunate to have a mentor. I have a lot of great mentors, but my father is one of them, and he's kind of in the business. And
Right.
when we went to go, I had to raise $1.6 million of limited partner equity for that 13 unit acquisition, and it was a grind raising 1.6 million.
It's even
I
hard today, right? I mean, it's
Well,
always hard,
it was so hard
especially
because
with no track record. Like,
I have zero experience.
wow.
I've never owned an apartment building. I'm going to manage it myself, but I think there's no joke, like 28 people in there, like 20 grand here, 50 grand here, but since then we've raised 120 million in the last 3.5 years. But I was proud of that because you grind, and I got it done, and that kind of kickstarted everything. But I'd say my next one is the 110 unit building I bought, not far from that building actually, because that
Okay.
was the biggest one. That's still the biggest apartment building we own to date. But that was cool because of everything I bought. That was the most dilapidated, disgusting. I mean, you'd have to take a shower when you left there. It was so gross. Rents were 80, 90% below market.
Wow.
It was disgusting.
I can't believe they're
Um,
that low.
it was awful. Um, and I got to give another shout out to, Bogey Steve, because, he set that deal up. He's been instrumental in our success and having good relationships with brokers like yourself and Bogey, and it really makes a long difference because they want to work with who they enjoy working with. But
Right.
so I was proud of that because it was big, and it kind of put me on the map a little, where people kind of realize, even though I don't like being on the map, but it kind of made people take me more seriously. Um, so I'm very proud of that. I mean, and it's cool to say, own a hotel in Laguna next to the Montage. I mean, just to say it, I'm proud. Even if we end up being 2 years delayed in construction and wildly over budget, I'm still gonna be proud because
Yeah.
it's in Laguna next to the Montage.
Right.
But I would say a deal that I haven't been proud of. I should say I haven't been proud of, but they're not all winners, right? You're gonna hit some, and you're not going to hit well. I'd say I'm proud of all of them, but we did a deal in Lomita that we got into, and it just probably my fault, and I learned my lesson. But you get involved in projects, maybe not with the right people, and or you just kind of you don't do enough due diligence, and you get too excited to do a deal, and you force it, and it ends up, you know, that and another deal. This actually, Dirk, you'll appreciate this. You'd actually helped with the loan, but it did teach me something, and it's not that it's a bad thing, because I think, and I'm even going to say it, Sunday Capital, great guys, A plus, but their structure is not how I roll. Because I like to keep stuff long term, I bought both these deals with pretty aggressive leverage.
Right.
And for me, it gets in the way of executing a long-term business plan because you really need to go, and you need to go fast.
Right.
And it wasn't something I was used to, and it kind of distracts you from execution on my business plan, not everybody's, but mine.
Yes.
and you're starting to not cover debt service and stress you out. So I had to sell both assets, but it taught me a really good lesson that if I am going to go in with a turn and burn strategy with super high leverage, that I better know what the fuck I'm doing,
Right.
because it can it can get nasty right away. So other than those two deals, that's kind of not my business plan. I don't use any aggressive leverage because I want to be able to manage my risk level. And if push comes to shove and rates skyrocket, the market goes down, and I'm sitting with very aggressive leverage,
Right.
it's not going to end well.
Yeah. No,
So
you're
um,
exactly right.
those two deals are, and again, to Sunday Capital, great guys, great company. I'd recommend them to anyone who wants a loan of, to that structure. Um, but for me, it taught me that that's not my business plan, and just to stay away from it.
Right. And, we're working with so many clients right now, Kody, where a lot of our clients do private bridge loans. Like Sunday's one of them, obviously, we work a lot with. And Mark and his partners over there are excellent people.
I've
Um,
talked to Mark several times, and I have nothing but good things to say about him.
Right. No, they're sharp and they're also investors themselves. But a lot of these bridge lenders right now have given people money over the last couple of years. And they've given money at 80, 85%, maybe 90% of cost on a case by case basis. And you know what? I mean, the rates did not come down like everyone anticipated, and people have not hit their NOIs and their pro formas. Insurance costs has gone through the roof that we've constantly belabored that point on. And you just can't rip people out of these units overnight. So with that being said, people have to be really careful, just like you're saying, Kody. And so many people get into these deals. And I actually had a client call me last night as we're talking about this, and he said, "I'm really embarrassed. I'm nervous. I'm over leveraged, and I need to start selling some assets that I didn't really want to because of my high leverage loan. It was a seller carryback, and another loan was a hard money loan where they just can't get the tenants out. Buying out tenants, getting those pro forma rents, being able to take an exit. Just right now, we're starting to see rent rates come down a little bit, but at 6.5, 7% rates on a takeout strategy, these deals just don't work. And
No,
so,
you're not going to have a cash out. You're going to have a cash in.
right. And those lenders are like, here's your due date, and you don't have it at your due date, and you can't execute, and you don't have the $1 million to write a check to the cash in. So you're forced to sell the property, and hopefully you can sell it for the existing debt. But it gets to be pretty hairy very quickly. So that's a great that you were able to get out of those deals, and a lot of people unfortunately are not as lucky. But
Yeah, and I'm going to be very annoying, and I hope he listens to this. Um, but thanks to Bogey, we were able to get out of them. He's been very helpful for us, and
yeah, Bogey's
um,
an excellent broker.
oh, he's the man, and he's loyal, and that's hard to find.
Right.
Um, but yeah, I mean, our business model is long-term sustained growth, and a bridge loan kind of doesn't fit that model, and that's okay.
Yeah, and it's not for everybody, and it's great. You know what you can get into, and you know what you can. I mean, that's the biggest thing. Other people take flyers, and a lot of people unfortunately just learn the hard way with some of these things. So moving into your career, and one of the last questions I have here, what were what was say your high point in your career and maybe one of the lowest points, and how did you fight back? Because I know you're strong as hell and you're very successful, and I know you're resilient with a ton of grit. So maybe if you can touch on that, Kody, to talk to some of the listeners, because a lot of people look at your success and be like, wow, this guy landed on third base, but obviously it was not the case how you started and whatnot. So if you could touch on that a little bit, please.
Um, Let me see. I got my highest point was probably recently. Uh, I mean, every week there's highs and lows. But I was looking at the questions a little bit before yesterday, before this morning, and going back to that first deal when I was telling you trying to raise 1.6 million and just grinding, and to the last day needing to fill the gap, right? Um, and then we just purchased the 56 or 7 units in Long Beach and Belmont Heights, Belmont Shore area. and the equity raise was, I think, 6 million, and I probably raised it, and we tied it up on a Tuesday, and I had it fully funded by Friday.
Wow.
And I kind of was like, that was a high point because I would say one of the most stressful things is when you tie something up and then going to raise money, and when it gets down to the wire and you got 2 weeks and you got to fill a $500,000 gap, and it's 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 stressful.
Right.
So um, it felt good to just make a few phone calls, and people you have, we've had a lot of deals and a lot of loyal investors, and when you have people that have invested in past stuff and they're ready to re-up and you make a phone call, they're like, awesome, Kody, I'm in. Like, it made me feel really good, that it wasn't like some new guy I met. They are investing again because they're happy with their current investment. So
Good for you.
that was the most recent high point that made me feel good. And I'd say another high point that I don't appreciate enough. But going back to, again, I always go back to that first asset. Me and my wife, we closed in August. I remember we are sitting in this. Her name was Kelly Elliott. It was Kelly Elliott's unit, 440 East San Antonio, apartment F. I'll never forget. And it's August or September, and it's like had to be 105 in that unit. And we did all the maintenance requests, right? We're yelling at each other trying to fix a screen. My wife and I, like, she telling me I'm doing it wrong. And now we have a team of 20 people. So I look around and, like, wow, it went from me and my wife just arguing over a screen to now I have a company, it's kind of cool. Um, and then the low point, um, it's kind of an easy one. Going back to investors that re-up, and keep investing in new deals because they're so happy with what they're invested in. There are some investors that have invested with me in the past, and it's not that they invested in a bad deal, that they kind of invested in, didn't understand what they were investing in, or even if a deal were hitting projections or ahead of projections, or some maybe we're not on projections right now. Whether renovation costs were higher than we thought, or we had some unexpected capital expenditure related to, some, a pipe breaks or whatever. I'm just giving examples of things. Um, but you get these phone calls and they kind of, it hurts, man. When an investor isn't happy, even if they're wrong, it hurts your feelings. And if someone out there says, well, don't take it personal, good luck.
Yeah.
Because I take it personal, and when someone says I'm not, when I live this thing, and it's all I do. I work my, and blood, sweat, and tears on a weekly basis running this company. You're not doing a good job, even if they're wrong. It hurts, and it hurts bad, and it's happened a few times, and I'd say that's about as low as it gets.
Right. Yeah. No, I completely understand it. And, I've raised money on deals as well over the years, and it's difficult, satisfying everyone on deals. I mean, I have some very successful clients now that don't have partners, and they make a joke like, the reason, what are partners good for in real estate deals? They're good for suing, because partnerships, eventually people lives change with death or health or divorce or some partnership dispute. And, that causes you to have to do something on a deal, whether it's a refinance, cash out, or a sale of a property you may not want to. So those things are hard. And, real estate's not an easy game. Everyone would be doing it and be as successful, obviously, as you have been over the last 4 years if it was easy. But the way you've managed your success and all the trials and tribulations through the the raising of the funds and managing the assets and growing from different product classes from apartments into hotel has been very impressive. And obviously that's been echoed um, in the real estate industry, and a lot of the brokers like Bogey and whatnot have worked with you speak the same way.
Yeah, and I
Kind of
mean, I've been fortunate. Like I said, I probably didn't say it enough, but I kind of grew up in real estate. My father's, has a large, real estate company, largely multifamily, and him along with even people like you, Dirk and Bogey, and I've been very fortunate to know guys like you as friends and mentors that can kind of, you know, walk, talk you off the ledge when when some days aren't as good as others.
right. We all have those days, and there is no
Mhm.
one left unscathed. I don't care what anybody says. Kind of on a final wrap here, Kody. Um, what is your, you know, what is your goal here for Paloma, and maybe you personally, over the next 12 months or so? What does that look like for you? What are you aspiring to be personally, and how about the growth there of the company?
Well, that's a good question. The goal will always be to stick to what we're good at, which is the small to mid-size multifamily value add. That's our niche. That's what we know best, and we're going to continue to do that. But what I mentioned earlier about the property management, I don't trust third-party property managers because, for the most part, like I mentioned, you know, your bottom line's not as important to them as it is to you
Right.
because they don't have any ownership. But we manage 30 buildings now of our own, and maybe 28. I don't know the exact number. Um, and I've me and my CFO and now partner Austin. We've built a really good property management company, and all of our employees only know one way to manage something, and it's if it's our own. So our policies and practices and property management expertise, I think, is some of the best around for the type of assets that we have. So now that we have this great team, I kind of a month ago, I'm like, if someone called me and said, "Will you manage my property?" Why wouldn't I? If I picked up another 30 units a block away from what I already own, I won't have to hire anyone.
Right.
We have a good team, and it's just more revenue to the company. And not only that, but not only is their asset going to get more efficient, but so are ours because there's a lot of fixed costs. If I can spread that over more units, why not?
Yeah,
So
that's
we're
smart.
making a big push to expand our property management business, which I never thought I would do. We've picked up three. We now third party property management, three assets, and um, one owned by one individual and another individual, and they've been just elated with how we've done, and we're going to keep doing it. It's going to help make all of our assets more efficient because we can spend the fixed cost. One, two, it's going to give me exposure to great people who own great assets. And to the extent that I manage it for them forever, great. Or maybe there's a day they want to sell it and I'm a natural buyer. Or maybe I go buy another deal and I develop a relationship with these people and I say, hey, do you want to invest in this? I mean, I just look at all the benefits of doing it. And outside of it being a little more work, I mean, we do it already, so why not?
Right. That's really smart, because then you get the economies of scale. You can leverage that off other assets too, and help someone else and make extra fee income as well. And then in the event that you can get a first right of refusal, in the event that someone's has an issue with their property or whatnot, you could also potentially buy those assets too. So there's a lot of different positive attributes of that as well down the road to help the client as well as yourself, to grow the company for the future.
Yeah, and I can help my friends and partners and guys like you, Dirk. If I third party property management and they need a refi,
Right.
well, I know just the guy. And if I can help you, you're going to help me. It's all going to come back. It all comes full circle. Or they want to sell and I'm not a natural buyer, hey, I know this great broker is perfect for this.
Right.
So, and there are others. I mean, I mentioned Bogey and you, but I want to help my friends out, and it comes full circle. We all are going to help each other. So I just thought there wouldn't be really a downside. I'm not afraid of more work. So that's kind of the next year. Other than doing what I already do, is there going to be a big push to pick up some more assets on the third party management side?
Okay. Well, good. Well, Kody, I can't thank you enough for your time today. I know it's very valuable. You have a lot going on, obviously, with all your acquisitions, management, development, now in the hotel, renovation phase. So I just really just want to say thank you. It means a lot. Thank you for coming on as, a colleague, a friend, and just someone who we've obviously known each other a long time. So thank you, Kody. And I wish you the most success. I know the listeners, obviously, and the viewers here are really going to appreciate this cast. So, um, again, I wish you all the best of luck and continue to want to keep working together over the years. So,
No,
you take care.
thank you. It's an honor. And, I've obviously looked into the podcast a lot, and, thanks for having a punk on like me, because you've had a lot of big dogs. So I'm pretty happy.
You're not far off at all right now. So I'm really proud of you, and it's great to be a part of your success. So thank you again for being a part of it, Kody, and have a great day. Thank you everyone for watching. This was another great episode with Kody Suryan. Please give us your thoughts and comments. Take care and have a great day. Thank you.
Thanks, man.